Some think this young woman's small tailor shop only works with cloth and thread. Little do they know, something greater is quietly being pieced together.
Thank you. Kongsi. Bye-bye.
Girls, let's pack.
Boss, actually there's another job.
What? How can we finish it in time? Who is it for?
Oh, my best friend.
Boleh je. You go now and enjoy your reunion dinner. Go.
Go. You can come back tomorrow.
Silap-silap kita ni orang yang last kali rushing for Chinese New Year.
At least you got salary and job, ma. No complain, lor.
Less talking. Faster finish this lah. And don't forget, once this is done, we still need a design that can represent all of us, you know. We can make it, right? It's Chinese New Year, you know. This is so heavy and muddy. Why do you always pick the lotus?
I remember when I was a young girl, my mom told me that the lotus is a lot like women. Kak Aini? Maru? Amay?
Bos, ingat tak masa tu? Ada tak mampu nak bayar rental rumah. Tapi you datang.
Why don't you come work with me?
You showed me how to live with dignity.
I telah cakap berapa kali, kerja biar tak boleh bawa anak, Ma.
You can speak up for yourself.
There was a time I honestly didn't know how to continue living. It was you. You told me everything was going to be all right.
It'll be okay. Come, follow me.
And that has carried me until today.
We made it for you, the lotus. Because it was you who told us that the lotus
doesn't choose easy water to grow in.
Even when it grows from mud,
It keeps its beauty, untouched by what tries to hold it down.
It is you that reminded us, no matter how difficult things become, you don't lose who you are.
Thank you, everyone. In the end, the greatest wealth is knowing our true worth.
And that is the story of this young woman's small tailor shop that has been quietly helping hundreds of women piece their lives together again.
Right. Morning, everyone. Welcome back to our morning kappa at 8. I'm Joseph here. So looking at the Hang Seng Index, you can see that the index is right now undergoing corrections. The index are clearly below 20 and 50 days moving average right now. And last week on the Tuesday, this bearish candlestick have reached support level. Hence, the bears are in control right now on the Hang Seng Index. Um, However, looking at their stock trading, right, we see opportunities in Link REIT, right? The counter have managed to break past this Hong Kong dollar 38 50 cents. Next hour will be 40 and followed by 41 50 cents, and downside support is 37. Secondly, we have the Lenovo 992, which also break past the resistance 9 Hong Kong dollar 50 cents. Next hour will be at 10 Hong Kong dollar 50 cents and followed by 11 Hong Kong dollar 50 cents. Downside support is at 9 ringgit, right? And looking at also the commodities market, right? I think everyone knows that US and Israel have launched attack on the Iran, and the Straits of Hormuz have been closed. And I can see that this morning, 6 a.m., the crude oil have jumped by at least 8%. And we continue to hold on to our long positions on the crude oil. We have long crude oil since $62 per barrel in the month of January, and right now our stop loss level remains unchanged at 58, and we do see opportunities on the upside for WTI. Meanwhile, the COMEX gold, right? We will see bullish trajectories remains intact despite there was a strong corrections in the month of February. So right now, the next level will be 5,005 and followed by 6,000. And as for the S&P 500, until last week, still lingering below the 20 days moving average. As I mentioned to you, that market do worry that the interest rate or the bond market, and that's why the S&P 500, right, is still undergoing consolidations on corrections until it managed to climb above the 20 days moving average or break above 7,000. Now, on the downside, 6,006 remain as a very important support level for the S&P 500. Right, and as for the trading stock, since the commodity is actually moving upwards, especially the gold counter, we'll be looking at Newmont, right? Code NEM, right? The counter have break past $128. Next level will be 135 and followed by 145. Downside support is at 120. Then on we have Lockheed Martin defense counter, US defense counter, which break past $650 US. Next level will be 680 and followed by 710. Downside support is 620. As for the Bursa Malaysia FPM KLCI benchmark index last week, confirmed that 1750 is our interim resistance. Now, after a strong selling pressure, next level will be 1685. But look at the weekly chart on the FPM KLCI, right? We can see that the 1645 will be a very important support level for the FPM KLCI, right? Last week, during the result week, most of the sectors have experienced corrections other than technology and construction, right? And as for the trading stock this morning, I think market will be looking at the hibiscus petroleum. So it managed to bounce off the 1 ringgit and 55 cents support level. On the downside, support is 150, right? On the upside, 165 and 170. Now, since crude oil have gone by 8%, I think very likely hibiscus is going to stage a breakout this morning as well, right? And do not forget that RHB currently we have a campaign, right? You may stand a chance to win our grand prize Tesla Model Y, and every month, right, we have the monthly gift. Monthly prize of iPhone 17 as well. So we have the monthly prizes and the year-end grand prize of Tesla Model Y, right? And as for trading stocks, firstly we look at QL resources that come above 4 ringgit 5 cents. Next hour will be 4 ringgit 40 cents and followed by 4 ringgit and 45 cents. downside support is at 3 ringgit and 90 cents. Secondly, we have the Penta Master eyeing to break past 3 ringgit and 35 cents. Break happened. Penta will be climbed towards 3 ringgit 60 cents and followed by 3 ringgit and 85 cents. Downside support is 3 ringgit and 10 cents. So we have breakout QR Resources and pending breakout Penta Master. So I'll stop here and pass on to Sian on the weekly economic updates. Thank you.
Thanks, Joseph. So good morning, everyone. Please let me to share my screen for now. So I hope you can see my screen now. So as what we actually highlighted in our last week market report, so we are seeing that there is some pullback of the risk sentiment from the market end, whether as indicated by our RHB risk sentiment index, the index has declined sharply, if you can see here. So for now, we advocate to stay neutral on global equities, as market last week is digesting over the tariff news with the concerns of the US currently 10% tariff may be raised to 15% later part in the year or in the month. And on the other hand, in this week, so we do expect that some impact on the global risk sentiment as well. So following the recent escalations over US and also Iran tensions, as what we see in previous few days as well. So the increased risk aversion will lead to global investment grade bonds valuation higher. So where the MSCI world gains for now will stay muted with a 0.24% gain on week basis. So on the commodity end, so we do watch out for the higher global producer input costs, especially following the recent increase in the Brent oil price. The Brent oil price has increased to around $80 per barrel this morning, following concerns over the crude oil supply disruptions due to some shipments disruptions in the Straits of Hormuz in last week as well. So, and then on the other hand, so we also seeing that some other key risks aside than the developments of recent geopolitical tensions. So some other key risks will be the potential escalations of the trade tensions as well, with Trump administration reportedly considering raising global tariff from current 10% to 15% as per the session 122, and ongoing uncertainties surrounding the US and Iran conflict as well. So in addition, China returned from its week-long holiday is likely to lift global market volatility and also trading volumes in the weeks ahead. So on the trade side, we remain cautious on trade risk as the administration waits additional trade avenues under Section 232 and also Section 301. So beyond these statutes, so the US has imposed preliminary countervailing duties on solar imports from India, Indonesia, and Laos to counter alleged subsidies in those industries. So we have also recalculated the US trade exposure and also the ASEAN trade exposure in our weekly report using the recently published Section 122 as well. So from the US perspective, so as what we're actually seeing here, first of all, what else could happen following post-quarters? So the current Section 232 and also Section 301 will actually take some time, specifically up to 12 months for investigation to be completed and legislation to be passed for now. And then secondly, there is also no certainty that investigation under these two sections will lead to new tariff. Recent denial of tariff against Canada and the use of IEEPA also suggests that officials are eyeing Trump's tariff agenda with increased scrutiny. So hence, we think that don't overreact yet, stay calm. So our proprietary models still signal some market confidence, although recently it has also been actually affected by the uncertainties over the tariff and also geopolitical fronts. So market volume will start picking up now that China returns from its week-long holiday, but volatility will likely accompany it. So from the US front, the US tariff under this Section 122 has more goods, so under the exemption list, so which is around 1.56 trillion and accounts for almost 45% of US imports. So when you compare to 43% under the previous EO 14360. So the previous 14360, so as actually published in November, so actually cover both tariff exemption lists in April, which applicable to all the trading partners. And also there is also a second list under this EO 14360, cover another list of exempted goods from US reciprocal tariff. So where it actually applicable to those aligned partner, so including Malaysia, that has signed a reciprocal trade agreement with US as well. So and then on Malaysia front, based on our preliminary analysis, so we have also seen that, so under this section 122, so where we will be having a lower effective tariff rate at 3.6%, so due to a lower tariff rate of 10% when you compare to the previous reciprocal tariff of 19%. So hence, the effective tariff rate now is lower at 3.6% at a 10% tariff. So when you compare to 6.6% of effective tariff rate where we are having previously. So this section 122 is slightly advantageous for Malaysia in terms of a lower tariff rate perspective. So the tariff burden has also been lower as well. So based on our calculation. So where we are also seeing that still a significant percentage of exports, which is at around 63.9% of exports to US, has been exempted from the reciprocal tariff recently, which is quite comparable to around 65% of what we are having previously. And yet we are having a lower tariff rate now at 10%. So even eventually, if the tariff was being raised to 15% in later part of the month or year, we are still having a lower effective tariff rate of 5.4%. So when we compare to 6.6% of tariff recently under the 19% tariff regime. So in short, the potential lower reciprocal tariff rates is also advantageous for Malaysia as well. Secondly, following the section 122, so there is still a limited impact on Malaysia key export segments, particularly from machinery and electrical products, still remain largely unaffected. So semiconductors, which is also Malaysia's largest exports to US, still cover under this section 232 of the Trade Expansion Act of 1962, and are treated separately from broad-based reciprocal tariff. So the recent reciprocal tariff on the semiconductors it also has limited impact on Malaysia, as is covered only a specific category of semiconductors, which is the advanced semicons. So and then thirdly, in terms of downside risk, we are seeing that it's more on the policy uncertainties, where the rising tariff and trade policies post quarters may also affect uncertainties may also affect some business sentiment and trade flows. Tariff rates could potentially rise to 15% from current 10%, depending on subsequent executive actions. So further uncertainties from US tariff policies could still persist, as I mentioned earlier on, with section 232 and 301 requiring up to 12 months for investigation and legislative action as well. So the transition to section 122 could also reduce some of Malaysia's comparative advantage as aligned partner, as we are sharing the similar rate with other trade partners now, which could also weakening its preferential position as well. So if you can see here, so Malaysia main exports to US are still very much covered under this section 122, with, for example, under this machinery and electrical equipment, which around 56.7% is still covered under this section 122 exemptions. So main exports to US are still covered, so which including machinery and electrical. Aside than that, this could also include selected food-related products and chemical products, which we refer to raw chemicals products and also pharmaceuticals product in this scenario. So however, transition to section 222 could remove some Malaysia comparative advantage, as we are talking about we are sharing a similar tariff rate with other trade partners. However, under this section 122. So Malaysia E&A exports to the US, so including semicon, IT and office equipment, and some of the audio or visual equipment are still covered in this section 122, which is also largely unchanged from the tariff exemptions granted under Executive Order 14360, this being issued in November 2025. So that's all from me. I'll pass the line to the next presenter. Thank you.
Yeah. Hi, everyone. Good morning. So for today, we have a results note out on CIMB. This is the fourth quarter results, which were in line. Net profit, 2 billion ringgit, was down 8% Q on Q, but up 7% year on year. And that brought the 2025 PATMI to 7.9 billion ringgit, or up 2% year-on-year. This was again in line with our and consensus expectations. The sequential drop in net profit was, I think, not too surprising, because the fourth quarter tends to be a seasonally slower quarter when it comes to non-interest income, things like trading and FX. So that was the main reason for the decline. An interim dividend per share of 20.35 cents was declared, up about 0.35 cents from the quarter last year. Full year DPS is 47.1 cents, which translates to a payout of 64.4%. Do note that this 47.1 cents also includes a 7 cent special dividend declared in the third quarter results. This was with respect to the 2 billion capital return plan that was announced. Highlights, I think the key highlight here, if you look at the gross impaired loans, the ratio of now 1.72% is a record low for the group. Loan loss coverage also 103%, suggests that asset quality looks pretty comfortable, and the balance sheet remains liquid with the loan to deposit ratio at 87%. For 2026, CIMB is targeting an ROE of 11 to 11.5%. This is really backed by asset growth of 5 to 7%. Margins could be about flattish to plus minus 5 basis points, with Malaysia potentially as a key driver for margin expansion, if funding costs can hold stable. It is keeping to its 55% ordinary dividend payout ratio for now, but will continue to reassess opportunities to raise the payout. One method of which is to extract higher dividends from subsidiaries. Our FY26 and 27 profit forecast is raised by about 3% each. This is on higher net interest income for the margin side and also better efficiencies. But there's no change to our 9 ringgit target price. In our view, valuations remain attractive. If you compare CIMB to the other big cap banks, this is the cheapest big cap banks. While if you look at dividend yields, it offers a 6% yield. This includes dividend from the capital return plan, which is also, we think, attractive. So we maintain our buy call on CIMB with a 9 ringgit target price. Okay, I'll pass you to the next speaker.
Hi, morning. Thanks, David. So we have MBM results briefing. We have MBM results review. FY25 met our expectations, but above streets at 100% to 106% of full year estimates. Nothing much from this set of results. FY25 were flattish year on year, but for Q25 saw a 17% uptick Q on Q. And this is mainly driven by the higher Product sales volume. Looking forward, we expect FY26 to be another resilient year, and this is supported by the demand from Product Trust. So the new trust has booked more than 5,000 bookings in 2 weeks after it launched, and in the month of January, it's already top 10 models, almost double that of Activa. And secondly, we also have tailwinds from the stronger ringgit. And based on our estimates, every 1% up in ringgit will lead to a 1 to 2% up in MBM's bottom line. So it's almost a 1-to-1 equivalent of correlation. Yeah, so we kept our earnings unchanged for now. We maintain buy with a TP of 6 ringgit. Dividend is attractive at 10%, and valuation now is also compelling. It's trading at below the 3-year average versus the plus 1.5 SD when it was at all-time high TIV back in 2024. I'll stop here and pass on to the next speaker. Thank you.
All right, thank you, Iftaar. Today we have a results review on Malaysian Resources Corporation Berhad, or MRCB, which saw its core FY25 results of 24.7 million, missing our estimates as it made up only 59 and 76% of ours and Street's full year projections. Negative deviation was due to the construction progress billings, which were too optimistic initially. But nevertheless, based on our own observations, we think that the real civil construction works for the Shah Alam Sports Complex to likely take place sometime in the second half of 2026, given that it has fully undergone the demolition process throughout FY25, and perhaps also on the start of the five LRT stations, LRT3 stations that are to be reinstated. So, with that in mind, construction outstanding order book is about 5.7 billion, which could sustain earnings over the next 3 years. But what I'd like to probably highlight was, which I think was hot topic of last week, where I think the government mentioned that the main contractor for LRT3, which is in a way MRCB, is in a way likely to be imposed with some LEDs. But from what we understand from the management review, that if there were to they would have, the government and the main con would have to go through a rigorous process to determine what is the final LED only after the LRT project is fully completed. Now they're just undergoing some final testings. So even if there were to be any LED, MRCB could mitigate it by charging some downstream claims to its subcontractors, that are probably involved in other type of works like the systems or signaling, for example. So with that in mind, we don't think it would be a major concern. Aside from that, property projects, property sales were at about 927 million ringgit, and for FY25, and they're targeting about 900 million worth of property sales for FY26, which is mainly going to be driven by the Malaysian projects. Launch-wise, they are expecting 2.2 billion worth of launches, similar to last year. So all in, given that results were below estimates, we trimmed down our earnings by 14 and 12% for FY25 and 26. And we introduced our FY28 earnings by assuming a 1.5 billion drop replenishment rate. So all in, we arrive at a new SOPTP of 57 cents, previously 67 cents. So that's all from me, everyone. Thank you for dialing into today's RSB Morning Kappa at 8. We will see you tomorrow at the same time and same place. Have a good and great trading day. Take care.